Hello, everyone. Welcome to Wharton Tech Talks. And today we have a very special guest, Saanya Ojha, who is a partner at Bain Capital Ventures, where she leads growth stage investments in cloud infrastructure, cybersecurity, and the developer ecosystem. With a keen eye for spotting innovative companies, Saanya partners with founders who are energized by challenges and on the front of building next generation of software products. Born in India, Sanya's career has taken her around the world, working and living in New York, Hong Kong, Singapore, and now San Francisco, where she began her investing journey at Goldman Sachs and worked for a hedge fund before moving into venture capital and growth equity. She completed her BS in economics from Wharton. When not working with founders, Saanya enjoys reading nonfiction, writing poetry, and hosting dinner parties, along with immersive travel and yoga. So, welcome today, Saanya. I would like you to start by telling us a little bit more about your journey.
Hi, Tanika. Thank you so much for having me. It's a pleasure to be here. I think a little bit about my journey. So, I'm originally from Chandigarh, grew up there 18 years of my life. I hadn't planned always to come to the US for my education, but I ended up going to summer school at Brown University, and I was really struck by how easily the curriculum flowed. It felt to me that, in India, you sort of had to describe what your end goal was. You wanted to become a doctor, a lawyer, and then you had to pick like that stream and stick with it. But the education system in the US felt a lot more flexible, and you could take classes across disciplines, and you could take your time to figure out what it was that you wanted to end up doing. So I really appreciated that outlook on education, and that's why I applied to a bunch of universities here, all, looking for need-aware or need-based institutions, Penn being one of them. And then I received a scholarship to come and study at Penn in the Huntsman program. So it's a dual degree, international studies, and then Wharton, where I ended up doing finance and operations and information management. I'd always enjoyed sort of international studies and politics because my mom and dad are professors in that discipline, and, dinner table conversations growing up revolved around those topics. And then really kind of fell in love with finance when I was at Wharton. I think the beauty of that discipline is that it kind of underpins everything that's happening. If you look at politics, you look at business, you look at even social causes and how to actually make a difference in the world, it all comes back to having the resources and allocating them properly. So there was just something about the intellectual simplicity of that discipline that really spoke to me. So I had a good time when I was at Penn. Got really interested in investing because it is like the culmination of interdisciplinary thinking, truly, because when you're looking at a company, it's not only finance and business, you're thinking about psychology, you're thinking about, market dynamics and learning so much about verticals that you may not have known before. Like for my first investing role, for the first few months, I was only investing in chemical companies. So it was the same as almost getting a minor in chemistry at a very accelerated pace. So that's what I really love about investing. It teaches you things about sections of the world that you didn't previously know. My first job out of undergrad was I joined the hedge fund at Goldman Sachs, and it was a very lean team, and it was fundamental bottom-up, analysis and long-short fundamental equity. We held our positions for longer. It wasn't trading around, so you really had to build conviction in a thesis, which I really enjoyed. I often describe my job as that of a detective. You kind of, had a hypothesis about the world, and then you had to go and hunt for reasons to see, validate it or disbelieve it. Worked out in New York for a year, didn't get my H-1B, so ended up in Hong Kong for a couple of years. Truly enjoyed my time working out of Asia, and when I was there, I had a chance to work out of Bangalore, Singapore, and London for brief periods before moving back to New York in 2019. At this point, I decided to switch over to private investing because, I realized I would often find myself on the short side of trades. And to get to a good short thesis, you have to kind of underwrite a secular decline in a company or a space. And that comes from that company being on the wrong side of a technological advancement or change in the world. So I was studying the most interesting trends in the world and then going and shorting the losers. And that, didn't sit right in that I was more interested in learning about the trend than who would actually lose from it. So I started spending more and more time thinking about, oh, this is what's possible, this is what the world could be. At which point I said, why don't I just do venture capital and invest behind the change that I'm seeing? So in 2019, I moved to San Francisco, took a job at Cotu as they were building out their private practice, and was focused on investing in software across all stages from seed through pre-IPO, and was there for about 3 years through end of 22. And then in 2023, I moved over to Bain Capital Ventures. And here I now lead growth investments in startup Series B and beyond in software infrastructure and cybersecurity. So long-winded answer, but it's been the longest journey so far. So here you have it.
Yeah, no, that's incredible. Like all the different dimensions in terms of, late stage, long shot, early stage startups, and all across the world. I feel like you come with so many diverse perspectives when you're evaluating your company. So that's honestly so awesome. But taking a step back, I want to know more about what do you think is the most challenging thing about transitioning, living abroad from India? Like, what are some of the things that you miss, and how have you overcome staying so far away from family?
I think that is the hardest thing, not being close to family. And we make it work, FaceTime, and I visit my parents, they visit me. But other than that, I wouldn't say there was any adjustment really required. I think we all live in increasingly global cities now. And for me, moving cities has always just been incredibly fun and not stressful in that way. I think I've kind of grown up as a uncommonly adaptable individual. So every time I change a city, I feel energized by it and not like nervous about it in the least. But of course, I wish my parents were, around and we travel and make it happen. So it's been an absolute joy for me to experience so many different cities, ways of living, make friends all over the place. I think the other downside, actually, now that I think about it, is my friends are all over the place. Friends of mine who've grown up in the Bay Area where I am right now have done college and school and worked here, and they have just these deep, rich networks of friends that they've known from across their life in one place. Mm-hmm. And I feel like my friends are all over the world. So it's just hard to see a good number of them at a given point in time without extensive planning. But other than that, I wouldn't change it for the world.
Yeah, no, that's fair. I resonate with that. But I guess that gives you an opportunity to go visit all of them wherever they are and recreate some of your memories and enjoy with them. And you basically answered one of my questions, which was why investing. But I was wondering, did you ever consider being an operator? And you mentioned that being an investor gives you basically a free MBA or free minor in any field that you're studying. But have you looked at it from the other lens?
Yeah, I mean, the temptation of being an investor is so often you're dealing with incredible founders building very impressive companies that you're just continually tempted to go leave and join them on their mission. The best founders are, evangelists and really sell you on the vision. So yeah, it often happens where I look at a company and I'm like, wow, I would love to be building alongside this person. I stayed on the investing side, not because operating isn't tempting, but because my love for investing ends up being greater at the end of the day. I truly enjoy the context switching that comes along with this role. You could be looking at a seed stage fintech startup in India, and then you can switch context and it's like a pre-IPO Israeli cybersecurity company. I think we were talking about this before. Some people enjoy looking at the trees and other people enjoy zooming out and looking at the forest as a whole. And I think my proclivity is more towards the zoomed out version of the world and being able to look at everything from a bird's eye view so you can spot patterns and you can spot trends across industries and have an idea of where the broader world is headed. So I know what energizes me, which is why I stick with investing, but I'm continuously tempted by operating.
That's really funny and interesting. I love the analogy about zooming out and looking at the forest versus climbing the trees maybe. So from the zoomed out forest perspective, what sectors do you think are the most exciting that you are looking forward to continuing investing in right now? Any trends?
Yeah, I mean, right now I invest in software infrastructure and cybersecurity. Mm-hmm. And what I love about these spaces is it's the tech that tech buys. It's essentially the enablement layer of the entire tech ecosystem.
Yeah.
It's what the most technical people are using to accomplish their day-to-day tasks. So I love just how foundational this part of the stack is. And that also leads to other advantages. For instance, the TAM is absolutely massive because it's horizontal. You make a database, you can be selling it across the world. You can have customers using it for a variety of use cases, and you can really scale with your customers. So I think there's massive TAM in these opportunities. And I think, most of the shifts that happen in the technology that we consume as investors actually begin in the infra layer and then ripple through the rest of the ecosystem. So for many, many reasons, this has become very quickly one of my favorite parts of the market to be investing in and looking for trends in. And, you're talking about trends. I mean, it's hard to have a conversation about that these days without talking about AI. So it definitely seems like every other day there's a new product announcement in terms of model capabilities increasing, in terms of how people are using these models in day-to-day workflows. And we are super early, even when it comes to the startup ecosystem, the app layer, the consumer companies, having had the time to digest all of the innovations that are happening at the infra layer. So I think over the next many, many years, we're going to see, all of the verticals that build on top of this infrastructure to adopt, infuse AI into their core products and kind of continue having that change percolate through the ecosystem. So I think definitely early days, and it's very interesting to see how our workflows fundamentally change as a result of the capabilities that we now have.
For sure. And you mentioned horizontal software. Maybe for our audience who's not familiar with horizontal versus vertical software companies, could you give like a quick overview of the differences between the two? And since you invest more in horizontal companies, maybe what do you think are the advantages of both either?
Yeah, I mean, I think both have advantages. It's just a difference of model. So one is not necessarily superior versus the other. Horizontal is you do one thing for many companies, and vertical is you do many things for one type of company. So if you're basically a horizontal player, you're just, maybe doing endpoint protection like CrowdStrike does for every single company in the world that has devices, that has endpoints, can use what you're doing. This can be a bakery in the south of France that has a website. This can be, Walmart. Like there's no size discrepancy, industry, vertical, geography. You're fully horizontal and you do one thing really, really well. Vertical, on the other hand, is you're building for a specific industry or vertical, and say, you are MindBody, which is essentially a software for gyms and spas and salons and that kind of thing. And then they can grow with a wedge from payments into doing scheduling, into doing payroll, into doing, lightweight website development. So you essentially pick a lane and then meet all of their needs. And the way you then grow is to do more and more for each individual customer. That's the difference between vertical and horizontal. And it really depends on the expertise of the founder, what their interest is. And at the end of the day, like, you should build in a market where you feel like you uniquely have a right to win. If your vector of expertise is, oh, I'm really, really good at endpoint protection, then you should aim to do that for everyone in the world. Versus if you're like, oh, I really understand how restaurants work, and I'm going to serve every need available for a restaurant, then you should be building in a vertical market. So it just depends on what angle you're coming from.
Yeah, like Toast does for restaurants. That's one public company that listeners can look up if they're interested in public vertical software companies. Yeah, so maybe shifting gears a little, I wanted to ask you, what would you say, how does your approach change when you're looking at public market companies that are recently IPO'd versus growth stage companies that you might be looking to invest in? Like, what are the things you look for in early stage public companies? Is it different? Is it similar?
Yeah, what you look for between early and growth is not really that different. What is different is the data points you have to support what you're looking for. You're always, at the end of the day, looking for an incredible founding team, building in a market that has an opportunity large enough to support it. Then you're looking to see that the product actually fits with the needs of the customers, which is product market fit. Then you're looking to see if they've built a sales org that supports the scaling potential of that company. If you could know all that at early, you would, but all you know at early is that there's a team you can get behind and this is a massive market and you think their approach makes sense. As the company progresses through its lifetime, you have more of an ability to look at what early customers are saying to judge product market fit. Then if they've already started monetizing, you can start seeing evidence of customer behavior in their numbers itself, like customers, vote with their dollars. So instead of talking to your initial design partners, you can just look at aggregated cohort view and understand, what the churn metrics are, what the retention metrics are, how people are scaling with the business. So I think at the end of the day, you always want to know the same things. You just have more ways to approximate that and de-risk the investment at the growth stage versus the early stage, which is exactly why we end up paying a lot more at the growth stage than the early stage, risk reward trade-off.
Sure. Yeah, no, that makes sense in terms of the valuation. And maybe what are some of the key qualities you look for when partnering with the founder?
Yeah, more than anything, resilience. It is a very, very hard job. It is very solitary. And, you kind of have to believe when no one else does on the idea. And then you also have to bet on yourself continuously. So I think it's someone who really has a sense of self-belief, a sense of resilience that things are going to get tough and I'm just going to keep going, and is able to really sell their vision to people. Because as a founder, you're always selling. You're either selling your employees on the vision so they come work for you, you're selling your customers on the vision so they use your product, you're selling your investors so that they actually back your vision. I think the ultimate job of a founder is to just be an exceptional salesperson. So I think that quality, that ability to really get people excited about a future that only you can see and picture is absolutely essential in a founder.
Yeah. So how would you say you measure resilience though? Like, how do you track this or figure that out that a person is resilient?
You can tell from conversations you have about their previous experiences. Like, I think, one of the things we really do is spend time with the founder, getting to know them before we make an investment, because it is a partnership for the long term. When you invest behind someone, you're probably going to be in their life and they're going to be in yours for the better part of a decade, at least. So I think there is a lot that comes down to your personal equation with the founder, and do you want to get into the trenches and build with this person? So I think everyone should spend a ton of time getting to know the people they're investing behind. Similarly, founders should really vet their investors, because these are going to be the people that, will be the ones that have to pick up your call at 2 a.m. to guide you through something and really be there for you as a resource. So both people should vet each other. I think, how can you tell someone's resilience? Just by their life journey, really. I think I've had founders, when they tell their life story, they don't realize the kind of things you pick up on when they're sharing their story. It'll be like, oh, I remember one of the founders we'd invested behind, they changed. I'm going to keep it general so that I don't give away the name of the company. But essentially, they changed something about their product. So all the customers needed to switch out their product to this new updated one, and to make it as friction free as possible, he himself was going to hand deliver to their customers the new product. So he was going all over the city in one day to get this in the hands of people. I think that's the level of dedication that you like to see, and that is truly resilience. Because that early on in the life stage of a company, if you're like, oh, I have to go and now do a product recall and switch for all of my customers, that sounds like it could be the end of the company. But the fact that he messaged it well, did it himself, was so proactive about it, I think that says a lot. The other thing that is a good tell is how a founder delivers bad news to investors or suboptimal news. Often people have a habit of wanting to bury the lead with the bad news. There'll be a lot of explanation up front, and then in the end, they'll deliver the bad news. but the right way to do it, and it also shows like your ability to be resilient, handle things head on, be transparent, be straightforward, is to start with, okay, we missed numbers this quarter. Let me tell you what's going on. I think you kind of have to, take it on the chin a little bit and just be proactive and accept the mistakes, and they're going to happen. So yeah, that's kind of what I end up looking for.
Yeah, no, those are great tips. So if all the founders that are listening, take note. And maybe once the founders like vetted the investor and they found a good partner, what are other common mistakes you see founders make when they're working with investors, and how do you think they can avoid them?
I think this is in two categories. One, when you're pitching to investors, what mistakes you can make. And two, after you pitch to investors and you are now, if the investors invested in you, what should you be doing? So let's take it in two parts. One, before you partnered up with the investor during the pitch process. I think the one that I already mentioned is hiding the bad. You should lead with the bad, because if you're dancing around like numbers that may not be exactly right, like I think that is a bigger red flag than numbers not being exactly where you want them to be. Startups are like, trial and error. Like everyone understands that you're going to have some better months versus others. And the only inexcusable part is trying to hide that. So I think just being extremely upfront and straightforward is absolutely key. And I think the one thing that's top of mind for me recently is, as a founder, you should really know your business's numbers cold. Like, it leaves a very bad taste in my mouth when you're asking a founder, like, okay, what's the gross margin of the business, or what's your burn, or, how many A's do you have on the team? And they don't have an answer instantly, because it's like, what else are you doing that you don't know this? So I think I really appreciate it when founders are extremely quick with knowing exactly what's going on in their business, and they're all over it and have a very deep sense of where things lie, versus when people kind of show that they don't have a strong handle on things. Two is, anytime you're pitching to an investor and they spot like a power struggle on the call, where maybe the CEO, COO are not getting along, or they're co-CEOs and their roles aren't clear, they're talking over each other, that's an immediate red flag, because, founder relationships are at the center of what makes a startup succeed, and a bad founder relationship can really mess things up. So I think those would be the things to be careful about before you're pitching and as you're pitching to an investor. I think once you've partnered with an investor, the mistake that founders make is not use the investors enough. Like once the investors on your cap table, they kind of work for you now, and you should make them work for you, which is use their network. Tell them what you need help with, get them to help you. The most effective founders I've seen will send out requests to their boards ahead of the board meeting on what they need. And they will tell everyone that, oh, this board member helped me with this board member helped me with this. And that almost forces everyone on the board to pull their weight. I think, my advice to founders would be to really leverage their board to add value to the business.
Yeah, those are some great tips. So thanks for sharing. And since you're focused more on cloud infrastructure and cybersecurity, how do you think generative AI is impacting the space and creating opportunities for companies?
I mean, Gen AI is impacting definitely everything across the board. If we were to take cybersecurity, it's interesting because I say the framework here is really cybersecurity for AI, AI for cybersecurity, and then security from AI. So there's an element of how you adopt AI within your organization needs to be secured. Otherwise, you can be exposing yourself to risks and vulnerabilities that you don't fully understand. So that's cybersecurity for AI, so that you're doing it in a safe way. Then there's AI for cybersecurity. There's a lot of things in cybersecurity that are automatable, that haven't been automated so far. There's, pattern matching at scale, vulnerability detection at scale, automating some of the menial repetitive tasks in the security center for an organization. All of that is AI for cybersecurity. You can just make the core operations of cyber better by introducing AI to automate some of the lower level tasks. And then there's security from AI. Obviously with generative AI, the ability to create very convincing deep fakes has skyrocketed, and the average consumer is not really aware of how sophisticated some of these tools have gotten. So So we need to be protected from very convincing deepfakes. So there's a lot that this technology particularly introduces in the cybersecurity space, because you have to secure its use, you have to use it to better your core product, and then you have to protect yourself from it. So clearly, along many vectors, it has a lot of implications for cybersecurity. And then cloud infrastructure has to kind of develop fast enough to meet the needs of customers to actually layer in these technologies to their product. So it really comes down to being that base layer of enablement for adoption of this technology. And of course, you're seeing, if you look at the cloud market, you're seeing Azure, AWS, GCP, Oracle really move fast to layer in these capabilities into their core cloud so that customers can just use these models in the cloud itself and infuse their end products with it. So I think you're kind of seeing everyone in a race to make sure they don't get left behind.
Yeah, I think that everybody just is focused on building, not as focused on security, but that's like a recipe for disaster. So cybersecurity is important, and hopefully companies are being mindful of that. What's the coolest startup that you've come across, or maybe the craziest use of AI you've seen till date?
I cannot pick one startup to say that it's the coolest startup. So I think I'll settle for craziest use of AI. Dude, I think some of these deep fake things, and by crazy, I don't mean good, are actually just crazy. So my parents live in Chandigarh, as I said, and my mom was telling me about how, some of her friends have gotten video calls from police officers in the US saying that their child who lives here has been hurt and they need them to send money to make sure that the child gets medical attention. And these are actual videos of US police officers, and then they put the child on the phone so you hear the voice of your kid. And it's crazy to me that who are these attackers that are targeting retired parents in Chandigarh. I think that's the crazy thing, which is the technology is moving so fast that consumer understanding of what is possible hasn't caught up to the attacker's ability to actually orchestrate these attacks, which is the concerning thing. So I think the craziest use of AI is 100% how people are being misled by deep fakes. And I do think we're in this window of time where not everyone realizes what the capabilities are quite fully yet, which gives this window of opportunity for attackers to exploit that gap, that knowledge gap, by perpetrating these attacks. And it's crazy in a bad way.
Yeah, it's scary to see what the world would look like in the next 5 years. I'm not sure we're going to recognize it if AI continues to innovate at the pace it is, and people aren't as mindful in using security to manage it. Shifting gears a little bit, what would you say is the best piece of advice that you've received that you'd like to pass on?
I think don't take things too seriously, because I think when you start taking things too seriously, you hold back yourself from capitalizing on opportunities that come your way, because you're like, oh, you second guess your abilities. You can really get caught up a little bit in your head instead of enjoying things for what they are. I think at the end of the day, you better pick a profession that you actually have fun doing, because someone is going to be really enjoying what they're doing, and you'll never be able to outcompete someone who's having a great time doing what you're struggling to do. So pick something you enjoy doing, and then don't take yourself too seriously. Just, take that shot, take a chance. It's not that big a deal, and have a good time while you're doing it, because obviously, work is a part of life. At the end of the day, you kind of have your life to live, and at the end of the day, it all ends one way for everyone. So you should have fun as you're going through your life and try to enjoy the thing that you've chosen as your profession.
Got it. That makes sense. And given all of the innovations and emerging trends, what would you say you do to stay on top of the evolving tech landscape? Any newsletters or podcasts that you recommend the audience subscribes to?
Honestly, it's very easy to stay up to date for me, because my job involves talking to founders every single day. So the things that make it to the news are usually lagging behind by a couple of weeks or months, because what you hear every day on the ground is kind of the most current. which is my favorite part of this job, which is that you're really like on the bleeding edge of what's going on. How do people stay current? I think clearly there's some companies that are at the forefront of the change that is happening right now. And there are some people that are very vocal about the strategies that they're taking. And I would say listen to podcasts, listen to people speak, listen to Satya Nadella. He comes on many, many podcasts. Listen to, Jensen Huang. Think about how he's thinking about the world, and honestly just read the earnings transcripts of companies that are really driving this change. Like, they're all publicly available. Look at what Microsoft has to say. Look at what Google has to say, Nvidia has to say. I think the best way to learn is not from secondary sources that analyze earnings, but just go to the horse's mouth, look at the investor presentation, and make up your own mind about what you think is happening. I think the thing that newsletters are great, 100%, and it's a great summarization of information, but there's no substitute for going straight to the source of the information and doing your own thinking around, okay, what does this mean? Because then that's where original thought comes in.
That makes a lot of sense. And yeah, I feel like forming your own opinion would also help you be more thoughtful and critical of and developing those skills for yourself. What message would you want to leave the audience with? Let's start with founders. What would you tell them?
I would tell founders to rely on each other and find a community that supports them through what they're doing. And that I applaud them for taking the difficult paths, and I really hope that they succeed. So I think it would be to really find the community around you that can support you in what is a pretty challenging journey, but hopefully is also rewarding.
Yeah, high risk, high reward. What would you tell people who want to break into VC?
I think if you want to break into VC, start thinking like one. And by thinking like one, I just mean start looking at the opportunities in the world. A VC's job is to really see how the world is today and then imagine what it can be, and start seeing those white spaces, start asking the questions, don't take things at face value. So if you want to break into VC, I think just if you enjoy doing that in your daily life, then it's a good fit for you and you should go for it.
That's great advice. Operate for the job that you want, not the one that you have.
Yeah.
And lastly, what would you tell people who are exploring careers in tech today? What should they look for in companies that they should want to join?
I think they should look for companies whose vision resonates with them, because, everything else is out of our control. Sometimes companies end up being right place, right time and skyrocket. Sometimes really great companies are a little bit ahead of their time. You're never going to be able to control all the variables. All you can control is that you're working on something that means something to you. So find something that resonates with you.
Yeah, and that you're passionate about. Well, Saanya, thank you so much for all of those amazing pieces of advice and telling us more about yourself. It was incredible to listen to. And thank you to our listeners for tuning in. Stay curious and keep exploring the world of technology. Until next time.
Thanks, Tanika.
Thank you.